Hi, everybody. It's Jessica Stone from Stansberry Research, and I'm joined by Dan Ferris, the editor of Extreme Value. We reached him all the way on the West Coast to talk more about what some of you may be thinking about what's going on in China. We know that there's rising anti-China sentiment in the United States. A Pew poll found that Americans overwhelmingly do not trust the Chinese government about the pandemic. And I'm wondering if that's sort of translating or trickling over into any investment trends that we see. I don't see it, but I wonder if you do.
No, I have not seen that at all. With the Shanghai index kind of going straight up, especially the last week or two here. There's your interest right there, and there's plenty of it.
What would you tell somebody that says, hey, listen, I just have an objection to what's going on in Hong Kong or what's going on in Xinjiang, and I don't want my money to finance anything that could be against human rights or against certain groups of people? How would you tell them to approach investing?
I sure get that. I sure get the desire not to want to trace your investment dollar from your pocket all the way into the hands of somebody you think is violating basic human rights, let's just say. It's really hard, though. If you really did it and you were really kind of religious about running that down for every stock you owned, you might not own any of them, because it's still a global economy. It's tariff wars aside, it's still a very highly connected, globalized economy, and it's really hard not to spend money, that some of which goes to China. A lot of U.S. companies, many of the more popular ones today, have China-based revenues, and they make things in China. They either get revenue from China or they make things in China. The big kind of open secret about Apple has been that that's where a lot of the growth has come from for them. That's it's where they make stuff, but it's also where they sell a lot of stuff. Look, there's a lot happening in China. It's too complex to even kind of sum it all up. But that's what you get when you get a really attractive long-term growth opportunity. You get all these thorny issues that rational human beings should be concerned about.
You kind of allude to this internal battle in your recent podcast, where you talk about sort of good guys, bad guys doesn't always equal good thinking. Can you expand on that a little bit?
Well, yeah, I think China is a perfect example of it. Do you think you should not own shares? Let's say you think Alibaba and Tencent are really great companies. Lots of, some folks at Stansberry have said that, and I don't know that I disagree. Because China puts, the two things I hate about China are, these accusations of putting Muslims in basically camps. And the other story, what we know exists, is this dog meat festival, which really turns my stomach. It just turns my stomach. It's horrible.
I forgot you're an animal lover. That's right.
Yeah.
It probably really got to you.
So if I look at that, am I going to say, well, I can't buy Alibaba because of that?
Mm-hmm.
I can't think that way. It's not all good and all bad.
You do have a red line when it comes to censorship, though. I think you told me that you don't invest in companies that censor First Amendment rights, even in other countries that don't have them.
Yeah, Google working for the Chinese government to come up with a better algorithm to censor, things like the phrase human rights, that bothers me a little bit with Google. I mean, I'm only human here. So, this good guy, bad guy thing, I only can go so far before I say, yeah, that's bad. And I think, that's kind of bad of Google to do that. I think they should refuse to do that.
Lastly, is there any real way that investors can send a message with how they invest to these companies about whether it's their governance or how they are handling certain populations of people or issues? Or is that just better left for a different arena like politics or advocacy or lobbying?
You have whatever power your shareholder vote gets you. And it's frequently not a lot because, of course, nowadays big institutions own most of the shares. So if you own 10,000 and BlackRock's ETFs own, 10 million, and BlackRock disagrees with you, guess who the company's going to listen to? Guess who they're not going to listen to? They're not going to listen to you. They are going to listen to BlackRock. So, but it doesn't mean you shouldn't express yourself and vote, vote your conscience. So you can do that. But yeah, you're probably right. There are probably other avenues that are better than just voting your shares.
Thank you so much for your perspective, Dan Ferris, there, editor of Extreme Value. We thank you for your time. And if you would like to see more content like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for watching.